Assalamu alaikum wa rahmatullahi wa barakatuhu, brothers and sisters. Let us continue our transmission here after this recitation of Dua Kumail. Tonight we have a very special guest. I really appreciate him staying up. It is about 11:30 p.m. his time in Orlando, Florida. This is a dear brother Naushad Virji, who is a member of Iman. Not too long ago, before COVID-19 broke out, he was living in Vancouver, and then he wanted to go back to his family out in Orlando, and that's where he is. I've known Naushad since 2008, I believe, when I first visited him in Orlando when we were doing the fundraising for the Iman Center. And he was a very generous supporter, and he's been a supporter ever since, and also a member of Iman. Naushad is a resident of Orlando right now. He is CEO of Sharia Portfolio. Sharia Portfolio is a leader in offering comprehensive Sharia-compliant investment solutions in North America, both in United States and Canada. Naushad earned a degree in business administration from the University of Florida, and then went on to successfully complete his Series 65 NASD examination and became a registered investment advisor. So, I've been wanting to, in fact, Naushad was supposed to visit us, if I'm not mistaken, sometime in April or May. Just before Ramadan or after Ramadan, I can't remember exactly. But then, COVID-19 pandemic broke out, and we never had this session. So today's session is trying to catch up a little bit here. He will cover a bunch of topics. He's going to educate us all on what is halal investing. What are the planning considerations we should really be taking into account given this COVID-19 situation. And, none of us are experts in financial matters, and obviously Warren Buffett, not everybody's a Warren Buffett, but what can we learn from these great people? And as we select people to advise on financial matters, what should we be looking in financial advisors? So I'm very pleased here to have Naushad. And Naushad, if you can turn your microphone on, and without further ado, I'm going to put him on here.
Hi, Assalamu alaikum. Well, thank you very much for inviting me to be here. I was really looking forward to that in-person presentation we were going to do earlier this year, but thank you for making this opportunity available. Seattle has always been my favorite city in the United States. If it wasn't for the very strong gravitational pull of family here in Orlando, I think I'd probably be living there right now. So thank you for giving me this opportunity to speak and join you tonight. 2020 has been a very challenging year. With the COVID-19 pandemic, with over 230,000 deaths, rising in infection rate throughout the country, and then on top of all of that, an election year, a lot of people have been concerned about a lot of different things, including their financial well-being. I believe Sharia-compliant investing is a very relevant solution during this kind of atmosphere. It's uniquely focused on avoiding debt, and it makes it the single best way to effectively hedge against leverage. So in this presentation, I'm going to speak about halal investing and how to get started, and why this may interest you or should interest you. So I'll go ahead and start with the presentation, managing money in a COVID-19 environment. We always have to start off with a disclaimer. I'm not giving specific advice for anyone here. To be able to give advice, you would need to go through a suitability discussion, to speak with a financial advisor, and I strongly recommend doing that. I'm going to just discuss some general information about the markets and how you can use Sharia-compliant investing to perhaps help you position yourself better in a climate like this. So what makes me qualified to talk on this subject? I am the founder, as Joad mentioned, of Sharia Portfolio. We founded the company in 2003, and at that time, Sharia-compliant investing in Islamic finance in general wasn't really as big of a thing, quite frankly. And it started to pick up and gain momentum, especially during the financial crisis. And the financial crisis showed us that Sharia-compliant investing is a very relevant tool, particularly in times of economic turbulence and uncertainty. And we saw the financial crisis lead to a lot of problems in the markets and the economy, and at the same time, Sharia-compliant investing propelling itself and growing from being, hundreds of millions of dollars in the industry to being about 6-7 billion in a short period of time. So it is, very relevant. Our agenda for today, I'm going to talk a little bit about who we are, Sharia Portfolio. I'm not going to spend too much time on that because I'm really excited about getting into the good stuff. So I'm going to talk about the stock market, particularly I find a lot of people in our communities generally are a little more cautious and really want to understand the basics. So I'm going to talk a little bit about the basics of the stock market and a little bit about value investing. And then we'll talk about Sharia compliance and how that fits into the world of investing. And then we'll talk about how do you get started, and then I'll be happy to answer any questions you might have after that. So as I mentioned earlier, Sharia Portfolio offers professionally managed investment solutions to help Muslims achieve their life goals while honoring their personal values. So that's what's really important to us. So the way we look at it is that most Muslims, when they go into a restaurant, they're interested in, is the meat that I can get here halal or not? That's one of the questions, right? Now, maybe the meat is halal. Then there's another question of, well, is there also pork being prepared in the kitchen? Is alcohol also being served? So there are a lot of considerations, and when you're thinking of your personal values, not all restaurants have you in mind specifically. So when it comes to investing, we find a lot of people are in the same situation where it's difficult to find an advisor or a firm that really understands you and what you're trying to accomplish. So fortunately, nowadays, there are more and more financial advisors around the country that are serving the Muslim community. And so when you're looking for help, those are the type of people you want to look for. And I'm going to talk more about how to find those people and what kind of questions to ask. So let's first get started in a general discussion about the stock market. So a stock is a part ownership of a business. A very simple way to think about a stock is that you're now in partnership with whichever company to be a part owner, even if it's a very small position, a very small owner of a very large company. You can own Microsoft, a piece of Microsoft, just like you can own your own business, your own startup business. So a stock is just a mechanism to own a larger company, whereas a bond is a very different thing. You're not an owner of a company, you're effectively loaning money to a company or a government. So this is one of the questions I get asked a lot, what's the difference between stocks and bonds? A stock is a ownership of a company, whereas a bond is a loan. So it's important to understand that differentiation. The shares of stocks that you buy are traded in the stock market. So the stock market allows you to be able to buy and sell these shares of stock or these shares of companies that you own very easily and very quickly. If I was to sell you my company because it's not publicly traded, there would be, months of negotiation and discussion and lawyers and all this to make a transaction. The stock market makes it very easy for us by giving us a very fluid, dynamic, and very liquid environment so that we can buy a stock and sell it very quickly if necessary. So why are people worried about the stock market? One of the questions that I get from people who really haven't been in the market or are concerned about the market is, well, can't I lose half my money? I've heard stories of coming in and losing 50% very quickly. And the people who are concerned about that kind of thing are generally thinking of a chart like this one that I have on the screen. This is a real chart of how the stock market looked in 2008. This is when the financial crisis was kind of really hitting hard. And we did see a drop of about 39% in the market. So people who are really afraid of the stock market are generally thinking of a scenario like this. Now, what I want to present to you is that if we kind of zoom out of that 1 year period, which is in that red circle on this chart, and we look a little longer term, we're seeing that the general direction of the market is an upward trend. And in general, this upward trend translates into a return of around 9 to 10% per year. So the S&P 500, which is effectively just a collection of the 500 largest companies in the country, have moved at this pattern over a longer period of time. So the takeaway here is that, yes, the markets can be more volatile in the shorter term. We don't know what's going to happen in the next month or two. But when we look longer term, the results tend to look a lot more encouraging. And when we think about investing, we should have a longer term horizon on our minds. You know, I sometimes get clients who will call up and say, you know, I'm thinking about buying a house in 3 months or 6 months. Can you make me a return with my money up until I need to make that down payment? And my answer is that, you know, I have no idea what's going to happen in the next month or two. And anyone that tells you that they do is generally trying to sell you something. So my suggestion is, you know, lock up your money in your bank account and use it in a few months for that down payment. But if you want to invest longer term, if you're thinking of a few years time period or more, then the stock market may be a little bit more appropriate. So it's important to have a longer time period in mind, because in the short term, there are fluctuations, and in the longer term, there's a general upward trend, as you can see from this chart. So why should you even think about investing? So some of the things that come to mind, people think of fancy cars and huge houses, but more often than not, it's not quite as exciting as that. Generally, the main reasons people consider investing are preparing for retirement, having a secure retirement ready for them when they're ready to leave work. Education, because college is not getting any cheaper, and those of you who have children know exactly what I mean. Charity, saving money on taxes, these are all important and practical goals and considerations for investing. You know, retirement, when you think about our golden years, we want, even if you're the type of person that says, well, I just intend to keep working, that's great. But let's be in a situation where you're working because you want to, not because you have to. So it's very important to start early. I remember my sister-in-law, when she was much, much younger, she had asked me a question about, well, and how much would I have to invest to have $1 million? And that number was really small when she was 10. And then I told her, when you're 20, that number is all of a sudden significantly larger. And then when you're 30, it's even larger. And by the time you're 40, now you're talking about putting aside $6,000 a month or something like that. None of us want to be in that position. So it's in your best interest to start early. So taxes is one of the considerations that I mentioned as to why you might want to start investing, and investing in retirement accounts that can help you tax-wise. And the reason why that's so important is the taxes have a way of eroding your returns. I mentioned that the stock market return is around 10.1% a year. If you're paying taxes on that, the return after taxes takes you down to about 8.1%. So 10.1% a year sounds a lot better to me than 8. And there are ways that your financial advisor can help you with retirement accounts like IRAs that can really help you keep more of what you've earned. Now, this slide is probably one of the most important in my opinion. And in all my presentations, I always kind of like to emphasize this one because especially if you're younger, this is a good way to think about where you are now and where you want to be down the line. So revenue streams are what this is all about, in my opinion. When you're investing, you're looking for additional revenue streams. So what do I mean by a revenue stream? Your primary revenue stream, especially when you're younger, is most likely your job. So whatever your job is, whether you're a realtor or own a restaurant or work for a big corporation, that paycheck is most likely your highest amount of income that you're getting. And that's the time that you want to start investing in other areas like stocks and maybe something else like real estate or whatever other type of investment. And you start off with this graph on the left where most of your income is coming from that primary source, which is most likely your job, your paycheck. And very little income initially is coming to you from stocks and other investments. Your goal by the time you retire should be that a lot of your income, the majority of your income, is coming from your investments. So in this example, I'm saying maybe your paycheck is now only 20% of your overall income, and your stock portfolio is generating another 40%, and your other investments might be another 40%. Now, this is the situation where you can really retire comfortably, and like I mentioned earlier, if you want to work, you're working because you want to, not because you have to. So this is a very important consideration in it, and it's a lot easier to get to this point if you start early and consistently. What are these other investments? I get that question a lot. Other investments could be real estate. You can invest in commercial real estate, residential real estate. You could buy commodities like precious metals, gold, for example. You could start up a business on the side. You could buy currencies or art. There are a lot of other things that you can do. I don't suggest putting all your eggs in one basket. So one of the things here, I showed you 3 revenue streams, and my recommendation is to have at least 3 revenue streams, 3 sources of income. And doesn't matter how much they are. Maybe you're starting off really small. Maybe you started a little business on the side, and maybe you're not making that much right now, but develop that, keep growing that. Have multiple revenue streams because you don't want to have all your eggs in one basket. If your only source of income is your paycheck, what happens if that paycheck stops? We're now in a year where we've seen unemployment increase quite a bit. We've seen a lot of businesses have to shut down, a lot of restaurants have to shut down, and it's been really tragic. If you're in a position where your salary is in jeopardy, you'll be very happy to have these other investment options helping to fill in those gaps, that alternative revenue streams. So it's very important to have these alternative revenue streams and to keep growing them over time so that you've diversified your overall income. So let's talk about stock market investing and how this works. We believe in value investing. There are a lot of different schools of thought, a lot of different ways to invest, and it's not necessarily that one is significantly better than another, but they're all just different approaches. And I like to talk a little bit about value investing because it's something that a lot of our clients can really relate to and understand. It makes that ticker symbol kind of come to life in a sense. So let's first define what value investing is. And this is a definition by Benjamin Graham in his book Security Analysis, which was actually written in 1934. An investment operation is one which, upon thorough analysis, promises safety of principal and satisfactory return. Operations not meeting these requirements are speculative. So basically, we can analyze and understand these companies that we invest in and look for a promise of safety of principal and satisfactory return. So that's actually what our investment process is all about. So value investing also known as fundamental analysis. And one of the easiest ways to explain this is to think about buying a business. Let's say I tell you that I'm ready to sell you Sharia Portfolio, just give me a $10 million check. Most likely, nobody is pulling out their checkbook right now. If you are, please see me afterwards. More likely, you're thinking to yourself, well, where does this $10 million number come from? How do you decide that your company is worth 10 million? Now, that's a very good question to ask. You're going to be thinking, what assets am I getting for 10 million? How much does your company make? How much has it been making for the last few years? How much are you going to make going forward? Who are your competitors? There's probably 100 different questions you would ask before you actually decided to take me up on my offer to buy my business. And even then, you're going to negotiate the price, and we would have pretty extensive discussions about what my company is worth. So my question is, when you bought your last stock, you were buying a business. As I mentioned earlier, when you buy a stock, you are now a business owner. So when you bought that stock, did you ask any of those same questions? So that's kind of the heart of value investing and fundamental analysis. Now, there is such a thing as value versus perception. So there are a lot of other ways to kind of try to understand market psychology and what's happening out there, reading the charts. What's interesting about that is that most of that technical analysis is focused on stock market volumes, how much people are buying, how much people are selling. So what really moves the stock price? If more people are buying today than selling, that stock price goes up. If more people are selling than are buying, that stock price is going to go down. Notice in that discussion, there's nothing about income, nothing about the value of a company or their assets. It's just simply volumes. So this is something, as a value investor, we want to try and take advantage of. If everybody is selling a stock and we determine that there is some substantial value in that company, then we may want to start buying that company and take advantage of, mispricing and potential mispricing in the market. So that's what value investing is all about. Now, some of the seminars I do on investing, just value investing alone, can take quite some time. So I don't want to get too much deeper into this. I just wanted to kind of touch upon this and kind of just explain this with a broader overview. But one of the points that I want to add in here is one from Warren Buffett, who a lot of people acknowledge is one of the most famous investors. And this is one of the quotes that I really like. He said, "Be fearful when others are greedy, and be greedy when others are fearful." Now, what does this mean? Think about when people are opening investment accounts and when people are really excited about investing. In my profession, doing this every day, one of the things I've seen is I get a ton of people wanting to invest when the markets have really come up a lot. Right now is a good case in point, actually. And I'm happy to have the business. But what I think is interesting about this is when the markets really go down substantially, like back in March, not too many people were calling in. People get really worried when the markets drop. And one of the really interesting phenomenon about the stock market is that it is the only market in the world where people really like to buy after the price has gone up. If you stop and think, if you went to go buy a car and you found that car was discounted, instead of being $20,000, it's now $18,000, and you say, well, no, I don't think I want to buy, something doesn't look right. And then the next day it's gone from 20,000 to 25,000, and then you get all excited and say, okay, now I'm ready to buy. That would basically be what we see in the stock market quite a bit. And this concept of be fearful when others are greedy, what he's talking about is when the markets are really going up, that's when you have to be a little bit more careful. And when the markets are down, I look at that as Black Friday coming early, quite frankly. Back in March, when the markets came down substantially, we actually had cash ready to invest. And that's exactly what we did in March. We fully invested our portfolios. We were very excited about it. And we were looking at this like Black Friday came early. So this whole concept about being fearful when others are greedy and being greedy when others are fearful is basically talking about, buying low and selling high in a nutshell. So let's move on to Sharia compliance and what makes buying and selling a stock halal or haram. So we'll start off with a definition of what this is all about, what Sharia compliant investing is. Halal investing refers to investments made in securities which conform to Islamic principles. When these investments adhere to the guidelines of a trustworthy Sharia advisory board, they are considered to be Sharia compliant. So we want to invest in companies that conform to our personal values. So just like we talked about going to that halal restaurant, when we go to restaurants that serve zabiha meat or restaurants that don't serve alcohol or pork products, you're buying the type of foods that conform to your personal values. You can do the same thing with your money and invest in companies that conform to your personal values. So how do we know which companies those are? Well, first and foremost, you want the opinion of scholars and people who have really focused on this topic and have dived in and researched hadith, researched the Quran, and have been able to develop guidelines which would help us feel a lot more secure about what we're buying in the markets. So the standard that we really like is presented by an organization that we call IOFI. The acronym is kind of a mouthful. It's the Accounting and Auditing Organization for Islamic Financial Institutions. They have a website, iofi.com, and this is a board that's made up of scholars from all over the world. So this is a shura council. This isn't one person spouting his opinions. This is a large group of scholars who have gotten together and thoroughly discussed this topic and have presented some findings of what they believe is Sharia compliant, what kind of stocks are actually halal. And one of the reasons we follow these particular standards is that they are more strict. And this is the gold standard of Sharia compliance. So we believe that we'd rather err on the side of caution when it comes to Sharia compliant investing. So we follow the guidelines made by this board. So when it comes to Sharia compliant investing, this isn't about my personal opinion. This is about a Shura council, a group of vetted scholars that are from all over the world, different parts of the world, who have gotten together and developed these standards. So the first part of those standards is, what are we not going to invest in? Now, this is kind of the easy part because we're basically talking about socially responsible investing. So it's pretty easy to say that we're going to avoid, weapons manufacturing, adult entertainment, gambling, tobacco, and other areas like that. So that's kind of the first part of the criteria, avoiding certain industries. And this is a little bit more common sense. I think most of us know that it's not likely that companies that produce alcohol are going to be Sharia compliant, or tobacco or adult entertainment or any of these industries. These industries we exclude, and that still leaves us with quite a few companies. Now, the only companies we're looking at, we're only talking about stocks, mutual funds, and ETFs. Preferred shares are not considered to be non-compliant. And part of the reason for that is because with preferred shares, you are, first of all, taking less risk and not sharing the risk equally. So one of the important principles in Islamic investing is that everyone takes an equal share of risk. So that's one of the reasons why we exclude preferred shares and we only focus on stocks, mutual funds, and ETFs. But the guidelines, apart from the industries that we look at, are these financial ratios. And I want to go through each one of these because these are pretty important. And this is the part that really gets interesting because it excludes, first of all, quite a few stocks from the market. But this is also what makes Sharia compliant investing so interesting in a volatile market and allows Sharia compliant investing to do pretty well when the markets are turbulent. And this, by the way, is also why so many non-Muslims invest in Sharia compliant investing. Yes, you heard that right. A lot of non-Muslims invest in Sharia compliant products, and they're not concerned about the Islamic principles. They're concerned about the stability that this type of investing offers. And here's the reason why. First of all, the interest-bearing debt that a company has must be less than 30% of the market cap, which is basically the value of the company. So if a company is worth, say, 100 million, just hypothetically, the debt that that company has must be less than 30 million. Now you'd be surprised how many companies exceed this one ratio alone. This excludes a significant number of stocks in the market because so many companies are utilizing debt. Now, sometimes I get a question, well, shouldn't we exclude debt completely? Why do we deal in debt at all? Well, debt is not necessarily a bad thing. You can, have some credit card debt when you shop and get your reward points. And then as long as you're paying off your credit card in full, there really isn't a problem. You're not carrying debt. You're not having to pay exorbitant interest rates. So having this 30% debt ratio gives you investments in companies that are not over leveraged or have too much debt. The cash and receivables over the total assets of a company also need to be 30%. Now, this is one that really confuses people. Why do we care about how much receivables a company has? The reason is that we want to avoid companies that have debt, but we also want to avoid companies that put a lot of other people in debt. So a case in point here is a company like General Motors. Producing cars and selling cars is not a problem. There's nothing haram about buying a company that produces cars. The issue with General Motors is that their receivables are substantially high because when they sell their cars, usually they're selling them with debt, with loans, rather than all cash. So they're effectively a company that puts a lot of people into debt, just like banks. Banks are another example of that. Their whole industry is based on debt. So we avoid some of these areas because we want to stay out of the companies that take debt and give debt. So either way, we're trying to avoid that whole industry of interest and riba. We also avoid companies that have non-compliant income, meaning non-Sharia income that exceeds 5% of the total. So one of the questions here is, first of all, what exactly does that mean? What that means is there are stocks like an airline, for example. You could say Delta Airlines, what's wrong with what they're doing? They're just transporting people from here to there, but they do serve alcohol on their flights. So Delta is not in the alcohol business. Their total income from selling alcohol is actually a lot less than 5%. So Delta is a stock that we can still consider. Now, Delta was Sharia compliant until a lot of the recent problems. Now they have a substantial amount of debt as a result of what's happening with COVID. So even though their non-compliant activities are in line, their debt no longer is. But if a company has a little bit of debt, a little bit of non-compliant income that's no no more than 5%, we still will consider it because that's not their main business activity. So that's kind of my rundown on Sharia compliance. So we've talked about investing, why should you consider investing? We've talked about, how does the market work and what is value investing? And we've now talked a little bit about Sharia compliance. So how do you get started? Like, how do you do this now? How do you get started on this path of investing? There's a few different ways that you can get started on your own. One is to self-manage your own portfolio and open a brokerage account with your local bank or with a discount broker like Schwab or TD Ameritrade or Fidelity or whichever one you like. And opening an account like that is kind of like opening a bank account. You transfer cash in. Now, the difference is once that cash is in your account, you can actually use it to buy and sell securities like stocks or mutual funds or ETFs. So the first way to do this is to open a brokerage account at with the firm of your choice and to manage that account yourself, choose what securities to buy and sell. The question here is, well, how do I know which stocks are Sharia compliant? If I'm doing this on my own, how do I know if Microsoft is Sharia compliant or Delta Airlines for that matter? How do you check? One of the easiest ways to do this is to grab a prospectus for a Sharia compliant fund. There's a few of them out there. And when you read over the prospectus, you get a list of all of the stocks that fund is investing in. So you're effectively taking advantage of somebody else's work. They've already done all the Sharia compliant investigation for you. All you have to do is limit your holdings to stocks within their list and then pick and choose those stocks. One of the best funds, in my opinion, if you're going to follow this process, is the SP Funds Sharia, the S&P 500 Sharia Exclusions Index. The symbol is SPUS. If you go to spfunds.com, you can get the prospectus, you can get a list of all the stocks that are in that fund. A fund, by the way, is just a collection of stocks. So it's like a basket of stocks that somebody's put together already, pre-made. And in this case, SPUS has about 200 stocks in it. It basically takes the S&P 500 and excludes anything that's not Sharia compliant. So what you're left with is all of the stocks in the S&P 500 that are Sharia compliant. Some of the top holdings are companies like Apple, Microsoft, Facebook, Johnson & Johnson, Procter & Gamble, Home Depot, just to give you an example of some of the type of stocks that are in that fund. So when you look at that list, you're going to see about 200 stocks that are all Sharia compliant, and you could just choose from those stocks and manage your own portfolio. So this is a really easy way to get started if you're someone who's interested in doing your own investing and are just looking for, what stocks are Sharia compliant. So this is one way to get started. Another solution is to utilize a robo-advisor. These are economical investment solutions that basically allow you to just go on the internet and you'll be able to open an account pretty easily by answering some questions about your risk profile and suitability. And then all your investments are kind of pre-selected for you and the whole process is automated. So this is kind of an easy way to get started. There are quite a few robo-advisors out there that offer Sharia compliant investing. Sharia Portfolio has one called SP Express. If you go to ShariaPortfolio.com, you can see that. There is another company called Wahid Invest that's based out of New York that's focused primarily in the Middle East, but they do have operations here as well. And then there's a newer company that's actually based in Seattle that's just started called Agaz Invest. I believe that's spelled AGHAZ. And they also have a robo-advisory that will allow you to just get up and running pretty quickly on your own just by going through online and having the whole process automated. Typically, that's a good solution, especially for smaller amounts or if you're just getting started. However, a lot of people who are working with larger amounts like to have a customized solution that's specifically for them. And they also want access to a financial advisor. So these are people who really should talk to a professional financial advisor or wealth manager. When you do that, you can have a solution that's actually customized for you. So when you go with a robo-advisor, you're kind of getting a one-size-fits-all approach. Whereas when you're working with a financial advisor, that advisor understands who you are, what your financial goals are, and they help you along the way. And when there are things like a COVID pandemic, they can help you position yourself to continue to be on track to reach your goals throughout the ups and downs and the turbulence that we see in the markets. They can also offer you alternative asset options like real estate or precious metals or other types of investments. And they take into consideration your financial goals, your risk tolerance, your time horizon, and any personal preferences you might have. So a financial advisor is like a partner to help you achieve your financial goals and be with you throughout the ups and downs. And it is comforting having that advisor there that you can call and talk to about what's going on. Unfortunately, sometimes there are major unexpected changes in your life. It can be a divorce, it could be a marriage, it could be children, it could be losing your job. It could be having a huge financial windfall where all of a sudden you inherited $1 million. Now what do I do? Having a financial advisor by your side can really help you because they're looking at your personal situation. It's not a prepackaged product or solution. They're looking at what's best for you. And a lot of financial advisors are fiduciaries where they're not making commissions by selling you products. They're really focused on really just looking at what's best for you. And typically they'll charge a percentage, like maybe 1% or 1.5% of whatever your investments are. And what's interesting about that is that your interests are aligned because your financial advisor, if you're started off with say $100,000 portfolio and you're paying your advisor 1%, it's in your advisor's best interest for that 100,000 to get bigger, because as your advisor, he wants to make 1% of a bigger number rather than a smaller number. So both of your best, your interests are aligned in that fiduciary also wants to see your portfolio go up. So these three options again were to manage your own portfolio, use a robo-advisor, or work with a professional wealth manager. One other thing that you could do, which I don't have a slide for, but I'll just throw out there are Sharia-compliant funds. Now, there haven't been funds for very long. For a long time, we really didn't have many Sharia-compliant solutions. SP Funds, which is one of our affiliate companies, has launched 2 Sharia-compliant ETFs. An ETF is a fund that's basically a passive index of just whatever Sharia compliant out there. It's put together in this basket that we call an ETF. And it makes it very easy for you or for your financial advisor to create what's called a core satellite approach, where you can have a core of the S&P 500 or the stocks that are Sharia compliant in the S&P 500 in the core of your portfolio. And then you can have these satellites where you're investing in other types of companies that you might be interested in. A lot of people are very excited about companies like Tesla. So you could have a ETF that's covered all the S&P 500, and then you can have Tesla kind of as a satellite. Now, why is this a good strategy? Because Tesla is one of those stocks that goes up and down quite a bit. Now, it has gone up more than it's gone down, but that's not likely to last forever. And again, you don't want to put all your eggs in one basket. So if Tesla continues to go up, you do have some benefit, but if it crashes, it's not going to take your entire portfolio down with it because you've got this other core in place. One other important note about portfolio construction is, how do you handle fixed income? Because in a traditional portfolio, you typically have equity or stocks, and then you have bonds, fixed income. In Sharia compliant investing, we're trying to avoid debt. So we're not buying bonds. So what do you do? This is where the Sukuk fund comes in. Now, it may have a funny name, but it has a tremendously important role in Sharia compliant portfolios. When we go back to what is a bond is basically debt. You're basically lending someone money when you buy a bond. You're giving them money and they're paying you a fixed rate of interest. And your concern is the credit quality. How strongly do I feel that this person is going to be able to pay me back? So the bond itself is backed by the issuer. You know, whoever you lent that money to, how likely are they to be able to pay you back? So it's all based on debt. A Sukuk is a very different approach. It's basically an asset-backed approach. Effectively, instead of loaning someone money, you're buying an asset that you're then turning around and leasing to that person. So this is a very important way of doing business now, because they're in the Middle East, where we've had tremendous growth. Companies like Emirates Airlines, for example, how did they grow and become the #1 airline in such a short amount of time? They utilize Sukuk funds to be able to buy an entire fleet of airplanes. And these Sukuk funds would basically buy the airplane and lease it back to them. So instead of them having to go out and buy hundreds or thousands of planes, they were able to effectively lease them. Now, the Sukuk itself is basically backed by the quality of the asset. So if, let's just say, Emirates had some huge financial problem, now you still have these airplanes that you can now lease to somebody else. A lot of the more popular Sukuks are investing in buildings, commercial buildings or residential Sharia-compliant mortgage products, or just land. There's a lot of different Sukuks out there. This has become very big in the Middle East, and it's become pretty prominent in Europe as well. In the US, it hasn't been that big until Goldman Sachs got into it. They started issuing Sukuks themselves. And now we're beginning to see more growth. And the Sukuk ETF that we launched, which is just a collection of Sukuks from all over the world, the ticker symbol is SPSK. It's the first of its kind in the world, and it allows the Muslim investor to have an alternative to bonds. Because this is backed by assets and has nothing to do with debt, it's not impacted by interest rate risk as much as a bond might be. And because it's not a stock, when the stock market crashes, the Sukuks typically aren't impacted nearly as much. And at the same time, they do have a yield because of all that lease income coming in. So the yield on Sukuks on our ETF anyway is over 2.5%. And the capital appreciation, at least when we do our back testing or when we're looking long term, we're seeing some pretty interesting stability and additional return above the dividend. So we're looking at an average return of like 3 to 5% a year. Now that doesn't sound huge, but when you are trying to protect your portfolio from downside risk, these Sukuk investments are extremely important. Because I always tell our clients that there's two things that we have to do as your advisor. There's two things that are important. One is to make you money. Two is to not lose you money. Now, sometimes that not losing you money is a higher priority than making you money. And this Sukuk is a very important position in those scenarios. Climates like right now, where the markets are really, really high, we're using Sukuk pretty aggressively because it really helps protect the portfolio. And if you're investing on your own, one of the things you can think about doing, with these two ETFs, you can have more of the S&P ETF when markets look great. And then when we're kind of beginning to see some volatility and some issues, rebalance and load up on Sukuk instead. And by just changing these weights, you can kind of handle different market conditions with relative ease just by using two ETFs. I had written an article earlier this year for Islamic Finance News, which discusses how to do that. If anyone's interested, feel free to just shoot me an email afterwards. I'll be happy to send you a copy of the article, or you can even find it online In fact, I think it's also on the SP Funds website, sp-funds.com. So if you're interested in that, that can help. One other thing I'll just say real quick about ETFs, we have another new one coming out, the first Sharia-compliant REIT in North America. We are launching that, and we partner with Standard & Poor's on our ETF, so it's another S&P product. The symbol will be SPRE, and that should be launched at year-end or early January. So this is another tool that you can use to have yet another asset class, in this case, real estate. So you can make, our goal with these ETFs is to make it easier for you and for financial advisors to help you, because these products can become a phenomenal core to your portfolio, and your financial advisor can rebalance these based on what's happening in the markets. So these are the different ways to get started. So the next question is, how do I choose a financial advisor? So there are three things that I think are important here. The first and foremost is the investment philosophy. Now, I mentioned in our case, we're a little bit more kind of slanted towards value investing, although we do use technicals as well. But we have our own approach to investing. Whichever advisor you talk to, understand what their investment philosophy is. Because when you're trying to understand that, you're basically understanding, what is that person going to do with my money? That's what it's all about. What are they going to do? Now, you don't have to know exactly how to do it or understand all of it, but you need to get what the concept is. I explain value investing, and when I have clients coming to me, I like to go into a little bit more detail regarding that so that you can really understand what it is we're doing. Now, there are a lot of different approaches, which are all great. A lot of great approaches to investing. When you talk to a financial advisor, just make sure you understand what they're doing, and whatever that process is should make sense to you. So it's important to understand that, and that's what we mean by the investment philosophy. The next thing is fees. So understand what your advisor is charging and how they get paid. This is an important consideration because sometimes you have advisors that are pushing other products that have really high commissions, and you want to make sure that that advisor's best interest matches up with your own. So understand what they're charging you and how they get paid, and that'll help you understand whether they're fiduciary or not, and whether they're kind of in line with your thinking and able to meet the needs that you have. And then, of course, the last point in choosing a financial advisor is Sharia compliance. This is an important topic because there are a lot of financial advisors that will look at just the first part of Sharia compliance, meaning that, okay, we'll strip out the alcohol, pornography, and all that stuff, and we're good to go. But the debt considerations are pretty important. And that, in fact, is what weeds out more stocks than does screening the industries. Out of about 10,000 stocks in the market or 11,000 stocks in the market, there are about 2,500 or 3,000 or so that are actually Sharia compliant. So there's plenty to work with. But you do need to work with an advisor that understands your values, that understands what's important to you. And so finding someone who does understand Sharia compliance is important. I've seen advisors, especially in the past, that would just put a Sharia fund as your core and then buy whatever it is they want to buy without any regard to continuing to follow those Islamic principles. So understand, how much your advisor knows about Sharia compliance, ask the questions. And these days, I think more and more advisors do get it. This has become a much bigger thing now. And I think a lot of advisors understand Sharia compliance. And so there are a lot of people you can talk to these days. But these are the three things I always recommend that you look at and ask your financial advisor about. So that's the end of my presentation. I'm leaving you with our website, ShariaPortfolio.com, if you want to find out more about our firm. We have set up a phone number that's very easy to remember, 888-HALAL-STOCKS. Or feel free to shoot us an email, info@ShariaPortfolio.com. So thank you for letting me go through all of that material. I'm happy to take any questions that anyone might have.
Well, Naushad, thank you very much for that very informative presentation. There's a lot of questions I'm sure that come to mind. I do actually have a few people already posted some questions which I'll present in a minute. But before I do that, I would like to actually invite our viewers. We got majority of our viewers are on YouTube. I'd like to actually suggest to them that if they want to participate interactively, then they should perhaps join us by going to our website. As you can see our website here, and you'll see on our website there's a link here to join interactively. Click this link, or you'll see a 9:30 thing here, Social Connect. You can click this link and you'll be able to join us. So Naushad, let me get started here on some of the questions they've been posted, right? The first question that came out here, and I think this is more a text kind of question, so you don't have to answer it if you don't feel that is the right thing to do. The question was, are there any limits on real estate IRA contributions? Or I should ask, can you put as much real estate into a real estate IRA as you want?
Well, there are some rules about that. So if you're talking about non-standard, alternative investments, basically. You can invest in real estate, but there are some IRS guidelines on that. So you can open an alternative investment account at, there are a lot of firms these days that do it. And you can invest in real estate, but that real estate can't be property that you're managing yourself or that you're living in. You can't buy yourself a home using that program. So there are some IRS guidelines, and I would recommend talking to an alternative asset provider, someone that specializes in that, and they can share the guidelines and what you can and can't do.
Okay, so we'll move along here. There's another question here. Do the scholars of AA or IFI have a consistent and a common definition of Sharia compliance? Say it another way, is their interpretation of Islam consistent with each other? For example, Wahhabis and Shias and Sunnis and Deobandis, and do they have a consistent understanding?
There's actually a very diverse group of scholars, and they're not all Arab. There's a lot of Desi scholars. There's even an American scholar. There's scholars from Malaysia, Indonesia. So it's not just a group of Arabs. So it's certainly not a Wahhabi group. But it is a group that's also commonly accepted by a lot of Shia scholars as well. I've seen a lot of presentations where they actually refer to certain Shia scholars who've also looked at this. Now, in the Shia school of thought, there isn't a similar body to this. I have actually talked to a lot of Shia scholars myself to discuss this topic, and for the most part, most of the scholars or the Maullanas that I've spoken to have basically referred back to IOFI, and they seem to be pretty good with these guidelines, but we don't have a formal approach in the Shia school of thought to this topic. So most of the people I've spoken with or have discussed this with in the Shia community do refer back to IOFI.
Okay, another question here. How do large cash balance companies like Apple or Microsoft or Google fit into the large cash balance restrictions?
Well, the restriction you're talking about has actually been changed by IOFI. So that's actually an older restriction that you're referring to. In the past, there used to be a restriction that if a company held a substantial amount of cash or cash equivalents on their financial statements, and if that amount exceeded 30% of their total assets, then it wouldn't be considered Sharia compliant. However, that's one of the things that's been kind of hotly contested over the years. And I think it was a year or maybe 2 years ago where IOFI struck that down, and that's no longer actually one of the requirements anymore.
Okay, and we'll move right along here. There's a question, since you mentioned Goldman Sachs offering sukuk or something else you mentioned, would you consider Goldman Sachs a financial, and would the company be allowed in your portfolio?
We do not have Goldman Sachs in our portfolio, but Goldman Sachs actually is our lead market maker for our ETFs. So they're pretty involved with our products, but we don't invest in them particularly. We use them as a service provider. We also don't invest in S&P directly. They're our partner in our ETFs. US Bank is our custodian. So we work with a lot of these financial companies to launch our products, but we're not investing in them. We're using them as a service provider.
Okay, thank you. Another question here coming up. What percentage of your overall liquid assets should you invest into the stock market?
Now, that's actually a very important question, and that's one of the most important topics to discuss with your financial advisor. Generally, with my clients, one of the things I like to do is kind of take a top-down approach. I like to look at, okay, what is your situation right now? What's your overall net worth? How much do you currently have in real estate? How much do you have in the stock market already? How much do you have in other types of investments? How much debt do you have? So there's a lot of these kinds of questions that we have to look at first before we can address how much you should invest in the stock market. So just as a quick case in point, if you tell me that you have debt of $1 million, but you have $100,000 in cash and you want to invest in the stock market, I'm going to be the first one to tell you that, I don't think you should invest. I think you should pay down that debt. But if your total debt is 100,000 and you've got 1 million in cash, that's a different story. So you really need to speak to a financial advisor who's looking at your personal situation to get a good assessment of how much is appropriate for you to invest.
Just one more reminder for those viewers who are watching us on YouTube. If you have any questions and you feel you're being left out, please just go to our website, the Iman website, and you can click on this link, interactive link, and you'll be able to come to the Zoom session here, and you'll be able to submit your question, and we'll be able to pose your question to Brother Naushad here. So we'll continue here with the next question. Any advice regarding options? And I'm assuming these are stock options.
Yeah, this is one of my least favorite questions, actually, only because Sharia scholars don't like stock options. Mainly because it's very, very speculative compared to owning a business, right? So when you buy a stock, again, you're owning a business long term, and Sharia scholars are just not too excited about options, and so they generally do not allow us to invest in options at all. Now, that's something that in IOFI guidelines, is pretty strict. Going back to the Shia guidelines and Shia scholars, there's not really a strong opinion on that topic. So, for the Shia school of thought, I can't decisively tell you that, well, it's not Sharia compliant. So you have to exercise your own caution. For us, we prefer to err on the side of caution. So we prefer to limit our purchases to stocks and equities and buy long. So we don't short, we don't buy options, no derivative products, and no preferred shares.
I mean, just a comment on this one. From what I remember in my early teenage years when I was looking at this option stuff, in generally, you can only provide options for securities you can underwrite. If you do not have any securities you can underwrite, then it's not permissible because it's speculation. But you can actually sell options on a future trading, for example. But anyway, I think Brother Naushad is correct that you probably should seek more jurisprudence on this topic from appropriate scholar of your choosing. A question here is, considering market is as volatile as it is right now, and also mortgage interest being at historical lows, would you recommend paying off your mortgage more aggressively or increase your contribution into the stock market?
Well, I'm always a big fan of reducing debt. I really am not a big fan of debt at all. And if you have an opportunity to reduce that, you should. However, when interest rates are this low, the other consideration is how low is the stock market? And right now, I don't think anyone can tell you that it's low. It's actually had a pretty good run the last couple of years, and the markets have touched historic highs just recently. So what I would tell you is that, and this is just, in general, if you have a lot of debt and the markets are this high, I would gravitate more towards wanting to reduce some of my debt. If the markets were low, like if this was back in March when we had a big drop in the market and all of a sudden it looked like Black Friday, then I might have a different answer. But for right now, for today, I would probably say, gravitate a little bit more towards paying off debt. But again, there's also the consideration of that top-down approach I mentioned earlier. Do you have a portfolio at all right now? And if you don't, then maybe you do need to start putting something together, start small, and dollar cost average over time. But if you already have a portfolio, and let's just say your question is, well, I have 100,000 in stocks already, I have 100,000 of debt. Should I be paying that or investing more? Right now, I would say maybe pay down the debt because the markets are so high, even though interest rates are so low. But this is the type of question that you really need to talk to a financial advisor. And this is where a financial advisor really comes in handy because they're looking at your personal situation. And I could tell you a lot more if I was talking to you one-on-one, because I would understand exactly where you're at and what you're trying to accomplish. Speaking generally, it is difficult to answer that.
I realize that, Naushad, it's half past midnight, or past half past midnight in your time. So we have one more question, and this question is a very good question. Does Sharia compliance include a business ethical practices? For example, fair treatment of workers, pollution, or destruction of the environment?
No, I'm glad that question is asked, because one of the things that we've discovered is that Sharia compliant stock funds like our ETF, SPUS, has one of the highest ESG rankings that we've seen. And in fact, if you're familiar with ESG, it's basically, environmental, socially responsible, and good corporate governance guidelines. So investing in companies that are not just socially responsible or Sharia compliant, but companies that are good for humanity, that are sustainable, that are promoting sustainability. And this is something that's really become very popular. And we have actually been delighted at how much Sharia compliant investing automatically just falls in line. If you go to a resource like etfdb.com, I believe that's the site, it's an ETF database online that ranks ETFs. They have a screen for ESG. And what you'll find with our ETF is that we're one of the very highly rated ETFs on that screen. So Sharia compliance is kind of automatically, it's like a ESG product that came out before ESG became so popular. So it does fit in very well with that. And I would say, you can look at those screens yourself on whichever financial site you're interested in, and very likely you're going to see pretty good results for Sharia compliant products on those screens.
So talking about results, another question just came in here, and I think we'll make this to be the last question. What have been the range of returns of Sharia compliant investment in recent years?
Sure. Well, recent years, they've been very good because the markets have been really good the last 2 years. So, I would, our returns have actually been spectacular the last couple of years. But I think a more important question is, longer term, let's say 10 years plus, where we have some market dips and choppy markets mixed in. Typically, we're finding a target for our more aggressive portfolios of somewhere around 8 to 12% a year. For our moderate portfolios, we're seeing around 7 to 8% per year. And for our more conservative portfolios, where we're really focused on capital preservation and mostly on Sukuk products, maybe a gold ETF, not as much in stocks, we're seeing returns of about 3 to 5%. So it depends on your risk tolerance and, how much you're comfortable with certain types of volatility. So those are the type of things a good financial advisor will review first, and then they'll put you into the right strategy that's in accordance with your personal situation.
So Naushad, the final question for me, right? I mean, clearly Sharia Portfolio is one of the leading financial advising companies in North America, right? Who is your competition, and what are the alternatives to you?
No, that's a good question. What's interesting about us is that there's no one firm that does everything we do in the Sharia space. Prior to us, there were a couple of Sharia fund companies. So there's companies like Amana Funds, which is a really good mutual fund company. Now, mutual fund is different from what we do. We're not selling a product. We're offering a service as financial advisors. So a fund company is just selling you funds. Now, we do that with our ETFs now, but with mutual funds, typically the fees tend to be a little bit higher. But companies like Amana do a pretty good job of managing that money, and they're doing pretty well. They're actually based in your area. They're not too far from Seattle. They're in Bellingham. And so that's one of the companies that comes to mind. But it's a fund. So you still need a financial advisor to help you construct your portfolio. But if you're comfortable doing it yourself, that's one of the funds you can consider. Another company that's a competitor on the wealth management side is Azad Asset Management based in Virginia. And they also offer Sharia-compliant investing. And they are, they're more focused on outsourcing their portfolio management. So whereas we have a whole team in-house that does that, their focus is to kind of sub it out and hire other people to manage the portfolios, and they're given those guidelines. But they do a good job as well. I think collectively, the three of us are the leading companies in North America. We are now going international. We're the first one to actually be in Canada, for example. We have an office in Vancouver and an office in Toronto. And in the next week or two, we're now launching our international service. So we're working with clients in places like Dubai, Pakistan, India, Kenya, Tanzania, and other countries. So we're very excited about this international expansion, which makes us the most, I guess, globally diversified in that, you know, we're taking clients from all over the world, and that's something we're really excited about. You know, our business, our industry really has grown. The Muslim community has come up pretty substantially, and it's actually a very fast-growing demographic. And according to Gallup polls and Pew Research, you'll find that the Muslim community does tend to be a little bit better educated and higher per capita income. So it is a very relevant demographic. And so a lot of financial companies are taking an interest in this, and there are other companies that are looking to get into Sharia compliant investing, some of the robo-advisors I mentioned earlier. So it is an area that is not even, you know, it's still kind of at the beginning stages. We have a long way to go, but it's going to continue growing, and the demand is there. You know, if you think about it, 1 in 4 people in the entire world is Muslim. That's a pretty big market. So Sharia compliant investing is not going away. It's only going to continue to grow and become bigger and bigger.
Finally, we'll end this one, absolutely the last one. Where can we find more information on Sharia investing?
I suggest if you take a look at ShariaPortfolio.com, we have an FAQ section, which answers a lot of questions about Sharia compliant investing. So one of the links there is IOFI. So you could go to IOFI and look up the standards and find more detail about that and how it works. You can also go on YouTube. There's a lot more information nowadays on Sharia compliant investing than there used to be. So there's a lot of YouTubers who like to talk about the topics. There are also rating agencies, like the one we use is called Raqaba. That's RAQABA. They do the auditing and advisory for firms like ours to just ensure, it's like a third party that's just making sure we're doing what we say we're going to do as far as Sharia compliance. So they're another good resource if you want to understand more about the rules and how it works. And they're also a good one to ask, you know, are these firms really Sharia compliant? And, you know, Raqaba happens to be the one that does our audits and inspections. So that's a good third party to ask, you know, about us or anyone else that you might be interested in.
Well, thank you very much, Naushad. You know, at this point, I've exhausted all the questions that were submitted in written form. If anybody on this Zoom session would like to speak or ask questions interactively, I would like to give you a chance to do so before we wind up things here. I really want to thank Naushad for staying up. It's like 1:45 his time, so I hope we won't keep him much longer than Kimo. But I really enjoyed the session. I think there were many stuff, a lot of stuff we learned and a lot of things to ask. And I hope we'll take you up on an in-person session here in Seattle, not long from now, when things open up a little bit here.
No, that would be wonderful. I really enjoyed it. And you know how we financial guys are, we love to talk. So I'm very happy to be here. Thank you for giving me the opportunity to answer your questions and talk a little bit about Sharia compliant investing. Anyone that has any questions, feel free to shoot us an email, info@ShariaPortfolio.com. And thank you for watching, and thank you for your time today.
Thank you. Now we're going to continue here with our pandemic prayer. Let's turn our attention to the pandemic prayer.
In the name of Allah, the most compassionate, the most merciful, all praise belongs to you, our Lord, Lord of the worlds. We ask you to increase your peace and blessings upon our Prophet and upon his family and friends millions of times. O Lord, despite this great storm, we thank you for the much needed slowdown. We thank you for the chance to take stock of our lives and finally attend to matters that we had delayed for so long. And we thank you for the newfound appreciation we have for your infinite blessings. O Lord, though we are grateful, we feel like powerless ships drifting into uncharted waters. Borders are closed and planes are grounded. Shops are shuttered and town centers are deserted. Our livelihoods have diminished and we can no longer spend or consume as we like. We can't even leave our homes to visit loved ones, some of whom we may never see again. Your houses are closed and there is no pilgrimage. O Lord, none of us know where all of this is heading. And so we turn to you, admitting our helplessness and fear. We beg you to help us weather this storm in the best of ways, and to please grant us all the good that it contains, and all the good that hides behind it, and to make the journey as smooth as possible. Multiply our positivity and resilience, help us be proactive and productive, and inspire us with creative solutions to the extraordinary challenges we face. Fill us with patience and self-control, gratitude and generosity, and deep compassion towards one another. Fill our homes and neighborhoods with peace, happiness, and grace, and make this the means of unity that humanity so desperately needs. Help us keep our bodies, souls, and minds as fit and healthy as possible. Protect us from infection and from any other illness or accident that would need medical help. Protect us from debt, unemployment, and bankruptcy. And protect us from the many other harms that this storm contains, and the harms which hide behind it. And whatever challenges you may place ahead of us, help us to overcome them and give us trust in your wisdom. O Lord, though we don't know where our ships will land, we ask you to help us exit from this storm better, stronger, and closer to you than when it began. And that you navigate us to a new normal that is far better than the one we left behind, and that you never allow us to forget the lessons we learned along the way. O Lord, grant all of this not just to us, but to our loved ones, our neighbors, our friends, our brothers and sisters throughout the world, and all humanity. O Lord, grant a fast recovery to those who are ill and a safe return to loved ones kept apart. Take special care of the old and vulnerable and those who are mentally unwell. Grant a special solace to those who are living alone, those who are dying alone, and those whose loved ones pass away. Grant a special patience to young children and the adults who are raising them. And grant a special mercy to those who are now locked up with mean, selfish, or abusive people. Grant a special grace to the frontline workers and volunteers upon whom so many depend, especially those who risk their own health to care for ours. And grant a special aid to the needy, to those with few resources, to those struggling to make ends meet, to those working under great pressure, and to those who are striving to make the world a better place. And we especially ask you to please compel our leaders to do what's best for us all. O Lord, you've promised to answer our calls, and you never break your promises, and you are the most generous of those who show generosity. So please answer our call in the most generous of ways, and keep us consistent in making it until we reach safety. And in closing, we ask you to increase your peace and blessings upon our Prophet and upon his family and friends millions of times, and all praise belongs to you. Ameen.
أَمَّن يُجِيبُ الْمُضْطَرَّ إِذَا دَعَاهُ وَيَكْشِفُ السُّوءَ أَمَّن يُجِيبُ الْمُضْطَرَّ إِذَا دَعَاهُ وَيَكْشِفُ السُّوءَ أَمَّن يُجِيبُ الْمُضْطَرَّ إِذَا دَعَاهُ وَيَكْشِفُ السُّوءَ أمن يجيب المضطر إذا دعاه ويكشف السوء أمن يجيب المضطر إذا دعاه ويكشف السوء. بسم الله الرحمن الرحيم. اللهم صل على محمد وآل محمد. اللهم كن لوليك الحجة ابن الحسن صلواتك عليه وعلى آبائه في هذه الساعة وفي كل ساعة وليا وحافظا وقائدا وناصرا ودليلا وعينا حتى تسكنه أرضك طوعا وتمتعه فيها طويلا. وصلى اللهم على سيدنا محمد وآله الطيبين الطاهرين.
بسم الله الرحمن الرحيم. اللهم صل على محمد وآل محمد. السلام عليك يا سيدي يا مولاي يا رسول الله. السلام عليك يا سيدي يا مولاي يا نبي الله. السلام عليك يا سيدي يا مولاي يا محمد بن عبد الله ورحمة الله وبركاته. السلام عليك يا رسول الله وعلى ابن عمك أمير المؤمنين علي بن أبي طالب وصي رسول رب العالمين. السلام عليك يا رسول الله وعلى بضعتك الصديقة الطاهرة فاطمة الزهراء سيدة نساء العالمين. السلام عليك يا رسول الله وعلى زوجتك الوفية الغراء خديجة الكبرى أم المؤمنين. السلام عليك يا رسول الله وعلى ولديك الإمامين الحسن والحسين سيدي شباب أهل الجنة. السلام عليك يا رسول الله وعلى أئمة المسلمين من ذرية ولدك الحسين علي السجاد ومحمد الباقر وجعفر الصادق وموسى الكاظم وعلي الرضا ومحمد الجواد وعلي الهادي والحسن العسكري والحجة بن الحسن المهدي. السلام عليك يا صاحب الزمان عجل الله تعالى فرجك وسهل الله مخرجك وظهورك وجعلنا الله من أنصارك وأعوانك والمستشهدين بين يديك. السلام عليكم جميعا ورحمة الله وبركاته.
Brothers and sisters, this brings us to the end of our live transmission for tonight. We will continue our social connection. If any of you are inclined, you guys can join us on the Zoom link by going to our website and clicking the interactive link. Otherwise, if you're partying company right now, we will say Khuda Hafiz, Assalamu alaikum, and Fi Amanillah. Thank you all for joining. I hope you enjoyed the presentation by Brother Naushad. Inshallah, we look forward to another presentation next week about wills and estate planning from Attorney Laura Hoxter. And we look forward to continuing these things. Thank you all for joining. And we'll end transmission now here on YouTube, but we will continue our live session.